81.8%. Seriously, just think about that number for a second. In the incredibly fast-paced, heavily scrutinized world of tech valuation, a sudden price target jump of that magnitude from a massive, historically conservative institutional bank, that is not just some minor tweak to a spreadsheet. That is a staggering financial earthquake. That 81.8% represents Deutsche Bank's recent hike in their price target from Micron technology, and honestly, it signals a complete wake-up call on Wall Street. They are ditching the old assumptions and waking up to a brand new reality for the fundamental architecture of the AI boom.
Welcome to The Explainer. Today, we're diving into a genuinely fascinating piece of equity research from Deutsche Bank that outlines a really compelling thesis. The core idea? Memory is no longer just some cheap, interchangeable commodity. You know, historically, memory was basically treated as the cheap cargo of the tech sector. It was famous for these massive boom and bust cycles where companies just raced to the bottom on price. But listen, that era is entirely over. Memory has quietly transformed into the hidden, high-value engine of the entire AI revolution. So we're going to unpack exactly why Micron is at the absolute heart of this transformative moment, look at the physical bottlenecks severely squeezing the global supply chain, and figure out what all of this means for the future of tech.
All right, so here is our roadmap for today. We'll start with 1, the trillion-dollar re-rating. Then we'll move to 2, memory's new AI paradigm. 3, the agentic AI demand boom. 4, the great supply squeeze. And finally 5, locking in the future.
Okay, let's jump right into section 1, the trillion-dollar re-rating.
If you trace Deutsche Bank's historical price target for Micron, it tells a wild story. For the longest time, it's just this relatively steady, predictable climb, exactly what you'd expect from a mature semiconductor company. But then, bam, a sudden vertical launch. Following some recent investor meetings over in Europe, Deutsche Bank pointed out that Micron's shares absolutely skyrocketed, jumping an astonishing 44% in just 2 weeks. We are talking about adding roughly $300 billion to its market cap almost overnight. Because they are now so confident in Micron's stable return on investment through the economic cycle, Deutsche Bank bumped their price target all the way up to $1,000 per share. Guys, that implies a massive, historic $1.1 trillion market cap. For a memory company to hit the trillion-dollar club, it means completely shedding that historical cyclical discount and officially joining the upper echelon of big tech.
And Deutsche Bank makes it crystal clear this isn't just normal market volatility. This isn't some temporary hype cycle that's going to fizzle out next quarter. They literally stated, paradigm shift in memory warrants re-rating. They see Micron sitting right at the epicenter of this massive transformation where 3 huge factors are colliding all at once. You've got radical new memory architectures being required, you've got exploding demand driven by AI data centers being built globally, and crucially, you have severe supply constraints rooted in physical manufacturing bottlenecks. Put those all together, and you are looking at a massive sustainable step-up in earnings.
Now you might be wondering, how does a trillion-dollar valuation actually make sense here? Well, to get it, you have to look at the broader AI ecosystem. Even at a projected $1.1 trillion, Micron's market cap is actually less than 5% of the combined caps of its largest customers. I mean, we're talking about the hyperscalers, the Microsofts, the Amazons, the Googles of the world, and of course, chip designers like NVIDIA. These giants are throwing down billions on AI factories, and memory is the absolute linchpin making all that silicon actually functional. So from Deutsche Bank's perspective, this valuation is highly reasonable when you realize the sheer amount of system-level value that memory is currently unlocking for these tech titans.
So let's move to section 2, memory's new AI paradigm. Why exactly is memory suddenly treated like gold? Well, it boils down to a fundamental shift in computing eras. Back in the PC and smartphone era, memory was just a required basic part, right? It relied heavily on consumer refresh cycles every few years, and the main goal for tech companies was pure cost minimization, just getting the cheapest bit possible while keeping your laptop or phone efficient. But the AI era has completely flipped this dynamic on its head. The incredibly powerful processors calculating these AI models are so fast that they are practically starving for data. They spend precious time just sitting around, waiting for memory to feed them information. So memory has actually emerged as the greatest physical bottleneck to performance. It's now this massive value add, because better memory, higher capacity, better speed, better power efficiency directly dictates how well an AI actually performs. Memory is definitely not a commodity anymore. It is a scarce, highly strategic asset.
All right, bring us to section 3, the agentic AI demand boom.
So what is the actual technology driving this unprecedented surge in demand? It's the rapid evolution from simple generative AI to what we call agentic AI. We are moving way past those stateless chatbots that just answer one basic trivia question at a time. Agentic AI refers to systems that actually store and recall past experiences, they learn from interactions, and they execute complex, multi-step workflows. Think about an AI agent that independently researches, plans, and books a whole corporate trip for you over several days. To pull that off, the AI has to maintain massive, continuous, long context windows. And holding and instantly recalling all of that deep context, that demands a structural, exponential increase in memory capacity per GPU.
You can actually think of modern AI architecture kind of like a highly specialized real estate stack. Every single level serves a critical function, and AI demands premium upgrades across the board. At the very top, you have high bandwidth memory, or HBM. This is the penthouse suite, ultra-fast, highly expensive real estate integrated directly next to the processor. It's totally essential for active token generation. Below that, acting as sort of the middle management, you got traditional main memory like DDR5 and LPDR attached to the CPUs for handling those long context queries. And finally, down at the foundation, you have NAND and SSD solutions. This is the vast, high-capacity warehouse used by model architects for deep inference context storage, maximizing retention while keeping costs under control. And here's the kicker, Micron's comprehensive product stack is perfectly positioned to service every single one of these booming layers.
Which brings us to Section 4, the Great Supply Squeeze.
Because honestly, explosive demand is only half the story here. The real climax of this narrative and the true catalyst for that trillion-dollar re-rating is what happens when this insatiable demand collides with severe, unyielding physical supply constraints. The semiconductor industry is hitting a brick wall. For decades, Moore's Law allowed memory makers to shrink manufacturing nodes and easily squeeze more memory onto every silicon wafer. That historically gave the industry low to mid-teens % growth in bits effectively for free. But Moore's Law is dramatically slowing down. The sheer complexity of these new manufacturing nodes is skyrocketing. Right now, new nodes are only offering about a 30% bit per wafer improvement. As a result, overall effective bit growth is slowing down to just the mid-single digits, and companies absolutely cannot just build their way out of this quickly. Lithography tools cost hundreds of millions of dollars, and constructing those highly specialized cleanroom facilities takes years of capital-intensive development.
Now, a really crucial metric to understand the depth of this squeeze is the HBM trade ratio. Since high-bandwidth memory is absolutely non-negotiable for AI, manufacturers have to dedicate significant resources to producing it. But HBM is not standard memory. It is incredibly complex. It requires extremely complex logic dies, delicate through-silicon vias to stack the chips, and intricate packaging. Because of all this complexity and lower manufacturing yields, HBM has a much larger physical die size than traditional memory. So producing it creates a massive opportunity cost right on the factory floor. Every single wafer dedicated to HBM physically displaces standard DRAM, fundamentally eating into the total global supply pool. And the numbers behind this displacement are just staggering. To produce one single bit of current generation HBM3E, it costs the equivalent of 3 bits of traditional DRAM capacity. It is a punishing 3-to-1 trade-off. And as the industry inevitably transitions to the next generation, HBM4E, that ratio is set to rise even further to 4-to-1. This dynamic creates an intense artificial scarcity across the entire technology market. When fabrication plants dedicate their limited wafers to HBM for the hyperscalers, there are simply fewer wafers left to produce standard memory for PCs, smartphones, and traditional enterprise servers. So you have extra strong AI demand colliding with this extra tight overall supply, driving up aggregate pricing in a uniquely tight environment that Deutsche Bank actually expects to remain robust straight through 2026.
And finally, Section 5, locking in the future.
So how exactly does a company operate when their product transforms from a ubiquitous commodity into the most coveted, heavily bottlenecked resource on Earth? Well, they permanently changed their business model. Micron is rolling out a brand new commercial contracting strategy called Strategic Customer Agreements, or SCAs. According to the research, Micron just completed its very first deal of this kind earlier this year, and they locked in a massive duration of 5 years. Now, in the memory market, which is historically famous for volatile quarter-to-quarter spot market swings, a 5-year guaranteed contract is an absolute paradigm shift. Tech giants are frankly so panicked about securing the memory supply required to train their future AI models that they are more than willing to trade long-term capital commitments just for absolute certainty.
These strategic customer agreements completely alter the risk profile of the memory business. Think about it. If you remove the devastating busts from the historical boom-bust cycle, you fundamentally change the risk premium Wall Street applies to the stock. By signing these 5-year agreements, Micron dramatically bolsters its financial visibility and deepens its integration with those top-tier customers. It adds crucial, predictable stability to their operating model, driving a truly sustainable return on investment. The overarching goal here is to secure supply for desperate customers while prioritizing profitability, ultimately locking in consistent, stabilized gross margins. And predictable cash flow, that is exactly how a company earns and maintains a trillion-dollar valuation from institutional investors, even if the current extreme supply and demand imbalances eventually normalize down the road.
Wrapping up, Deutsche Bank points out that on top of these massive, industry-wide tailwinds, Micron's superior internal execution positions them perfectly to capture this value. They boast leading-edge technology in both DRAM and NAND. They are aggressively shifting into a richer business mix, moving away from low-margin consumer electronics and indexing heavily into high-margin enterprise-grade AI servers and storage. Combined with the healthiest net cash position in the company's history, they aren't just passively riding the AI wave, they're executing at the absolute highest level to structurally transform their business.
So we have explored how memory has fundamentally transformed from a cheap, abundant commodity into the highly strategic trillion-dollar engine of the agentic AI era. We've seen how explosive demand is severely constrained by the immutable laws of physics, complex manufacturing limits, and absolute artificial scarcity. So I will leave you with this final thought to ponder. If memory is truly the ultimate physical bottleneck dictating the future capabilities of artificial intelligence, who really holds the true geopolitical and economic power in the global tech supply chain? Thank you so much for joining me for this explainer, and definitely keep your eyes on the memory market.